What is up, guys? So I'm gonna show you in this video how I made about 345 bucks on SPX, and how a lot of my students made money as well, simply by trading based off volume. Okay, so we're gonna look at how I use volume in my trading, how I used it today to make money, and deep dive into all of that. So I made a video in the past talking about volume, and really what volume comes down to is understanding high volume. Okay, low volume doesn't mean anything. All right, if I see low volume, like any of this low volume in here, I don't care. I don't pay attention to it. It doesn't really mean anything to me. Simply just doesn't matter. High volume, that's where I want to look at. Okay, high volume is where real players are coming into the market. And so what typically happens, if I look at a stock like Airbnb, right? We go to like an hourly chart, right? Right here, you can see we have a huge volume spike. And when you see a huge volume spike, what's happening is you have a lot of, institutions, smart money, whatever you want to call it, who's buying in that area. And so they're buying that up, and then price is going to reverse and go the other way. Now, sometimes you'll see a huge volume spike, and price will just continue going down, right? So as in this example, sometimes price will have that volume spike, and it'll just keep going all the way back down. And so that's essentially what I'm going to talk about today and how I ended up profiting off that. Now, I have a few other things. I'm going to break down the trade and talk about volume, but the first thing is you got to understand about volume. That volume is just one part of the setup. Okay, you shouldn't have a strategy that relies entirely on volume. Okay, it should be something that you add to your strategy, and that's what I did today. But it's not something that you want to completely rely on 100%. All right, so now that we got that out of the way, let's go ahead and take a look at today. So ES today just absolutely dumped. All right, we opened somewhere all the way up here. Just went down a little bit, and the rest of the day just selling all the way down. You can see, looking at the volume, right here at around, was this 1022, we saw a huge volume spike, all right? And on this volume spike, I told myself, okay, at this point, price already went, where is it? Price already went way below demand, okay? So price was already back below demand. We were below a demand zone up here I was looking at, so we were already breaking demand zones left and right. But keeping this in my mind, I said, okay, prices now has this volume spike, so we may see a reversal. And what happens is we consolidate for a few minutes, and then price ends up going lower, and we just go right through it, just keep going down. And so what's actually happening in this scenario is, you have smart money institutions who are picking up a bunch of futures contracts right around this 4139 area. They're buying essentially the bottom of this move here, and let me zoom that out. And we just get run over. So everybody who bought in this area they get run over. Now they want to be able to sell at break even, right? They don't want to take a big loss on this. They don't want to hold these contracts because they're expecting to push price up, right? They're the ones who are buying this and holding this up. And the fact that price was able to get below it means there's a lot of sellers, okay? Way more than they would have ever thought. So when you see that, especially on a day like today where price just keeps going down, there's a lot of sellers because we don't get that immediate reversal, which means they're going to want to get up break even, which also means you can use this area as a pivot. And so what I did is say, okay, price has now gone below it. I'm going to look to get short. Okay, and now I was trading a few other things. I was also looking at SPY. I was looking at a different area up here. It's called single prints. I had a level or a zone right around this area here. And so I was like, okay, remember this is the volume spike here that happened on ES. Let me go ahead and make this black edge a little bit easier to see. So this black lines, this is my zone in between it here. The volume spike was on ES here, and I said, okay, this is my pivot area where I believe price is going to hold up now that we're below it. And so we came back down below this zone that I had marked here. So I'm like, okay, I'm going to wait for pullback, get short. My stop is going to be right above the top of this volume node. So I'm expecting price to come down and, not come back above this little volume area. So I end up getting short, comes back down, only half size, so I was looking for a little pop higher to get in full size. Comes back down, ends up hitting my target. And the cool thing is, right when it hits my target, we see another volume spike. Okay? So when you see this volume spike, that's a good sign that you may want to get out of your position if you're riding this short. And it's a sign that price may reverse. So what happens? Okay, we draw that same zone right from the bottom of that candle. We extend it out. Okay? You can see it acts as a pretty good pivot, right? Price comes down, right? Institutions buy here. They hold it up. Okay, that shows us a little bit of strength, right? Now we know that there's some buyers, some real strength, people who are looking to buy in this area. They give it one more dip lower, right? We get a little stop hunt just to fake some people out. We'll get a little increased volume there as well compared to the past, was this like 20, 30 minutes of price action? We see another little spike. And we end up rallying higher. Demand forms, we come back down right in that same area that they initially bought, right in this area here, came back down. They defended that area. They probably picked up a lot more shares in this, or futures contracts in this area here as we were consolidating. Probably just had a bunch of orders out. Stop on it, let it go, took even more, and they went higher. So now we know there's institutions, smart money, there's a lot of people buying in this general area. Right? We see the volume come in, we see they hold it, we see they get one more little stop, a lot more volume comes in, and then we rip it higher. And that's when you know, okay, now I know there is a lot of smart money or institutions, whatever you want to call it, who are buying this zone. And so price ends up retesting it, and we end up coming all the way back higher. And now we're still moving up as the day goes on. The cool thing is you can see, remember this area, right? Right in this area where they were initially buying this here, we extend that out. It ends up being a little resistance zone. So you come up, test it. It's not perfect, right? We're off by a few points or whatever. We end up dropping, 10 or 15 points. So you can use that area as your little zone. And I'm sure, like, over the next few days, over tomorrow, this area, this 4111 to 4109, it's going to be a pretty significant area. Okay, institutions may defend it if price comes down to it. They may, it may go below it, and then they'll look to short it, right? All we know is that that's a good area that price is going to want to look at, to trade. And so by looking at this 1 minute chart, by using the advantage of volume, you're able to essentially, take advantage of that volume spike. You can just say, okay, if I see that volume spike, I can say, all right, well, if I'm going to look for price to move higher now. And you can look for a pullback, maybe down to a demand zone, and look to move higher. Or if you're, the other way, if you're looking short and you see a huge volume spike, you can say, all right, you know what? I see a huge volume spike. Maybe I'm going to get out some here. Or you're going to wait and see, okay, let's say if they defend or not. If they don't, cool. Now I'm going to move my stop right above here. Okay, so you can use it a lot in different ways to your advantage. And same thing right here, right? This is where I got out majority of my position. I was only in half size, but I ended up getting out here because I saw that huge volume spike at my target. So, like, of course I want to get out. We end up bouncing a little bit, going lower, and then we end up, rallying higher. But you guys get the point. What you want to do is look at volume. Okay, use the 1 minute chart, works on all time frames. You just want to see, okay, after we get that volume spike, what happens? Do the buyers defend it? Great, maybe price is going to reverse. If they don't defend it, you still want to draw that area out because that's where a lot of smart money is going to be getting in. And then you can use that area as a pivot. And if we get below it, if there's a huge volume spike and the price immediately gets below it, that tells you there is a lot of strong sellers. Okay, that shows when you see that volume spike, you're going to expect price to move higher. But if we don't, that means that it's a very, very strong sign of one-sided directional move. And that way you can know, like, okay, I don't want to get long. Okay, I do not want to be long after seeing this move. So that's when I knew, okay, now I want to look to get short. I combined it with my other strategy, which is a pivot strategy here. So I waited for a price to get below my pivot, took it off the retrace of the pivot, ended up taking it all the way down lower. All right. So very, very simple as long as you use volume the correct way. Now, I look at volume using ES futures. I don't like using SPY. Other stocks, it should work fine if you're looking at the volume. But if it's come to indexes or ETFs, you really want to look at the future side of things. It's gonna be a lot more accurate because that's where a lot of the bigger players are going to be positioning themselves is trading futures. So that's essentially how I look at it. All right, now, guys, like I said before, you really want to make sure that you're only using volume with a strategy that you already have. Okay, you don't want to solely base it off of volume because it's really not going to work. I use supply demand, I use balance theory, I use a lot of other strategies, a lot of other elements in my trading to the point where I now have a proven strategy that actually works. Okay, and because of that, people in the Freedom team have been able to make some pretty good profits. Just today, we had Tucker make money, pretty huge day for me, 7% in his account. Drew made money, literally just joined. Sid also just joined, made $200. So you can see that when you have a proven strategy and you're able to add other elements into it, like volume, trend, market structure, you're going to see your increase in win rate and in your risk reward. Okay, you're going to see everything end up going higher. Okay, so if you guys are interested in joining the Freedom Team, it's a one-on-one mentorship that I do. I work with you one-on-one. I'll make you consistently profitable in just 8 weeks without relying on any alerts and without trading more than an hour a day. All you have to do is click the first link in the description. We'll get you on a call with someone from me or someone from my team, and we'll see if you're a good fit. Okay, and if you're not a good fit, we're still going to help you out with any roadblocks you have. So it's a win-win no matter what, just by booking a call with us. All right. So first link in the description. If you guys did enjoy this video, leave a like, subscribe, comment. Please comment other videos I should watch or other videos I should make. I'm running out of ideas for YouTube, videos. So give me some ideas to make, and I'll make sure to upload those. But yeah, thank you guys so much for watching, and I'll see you all in the next one.